Hey guys, thanks for stopping by thetradinganalyst.com. This is Taylor, and we're going to take a look at the gold chart here. I haven't touched on gold in a while, and that's because we've been really in a chop zone, and I really didn't have much to say about this commodity. But looks like it wants to start moving, so that's why I wanted to do a video and hopefully help you guys out where you can get on the right side of the trade. So first and foremost, we're going to get right into it. Gold is in an uptrend. Let's just get that out of the way. This is 1 year of action. If you go back 2 years of action, you can clearly see gold has been in an uptrend. Okay, so I'm going to zoom back in to the last year. And right now, what we're doing is just kind of working off our trend here and kind of resting, just like we did over here. You can see that we kind of rested in a pattern like this, very similar to what we're doing right now. Okay, see that pattern? Very, very similar. All right. Now, when we broke out, and by the way, you can go back to these videos that I've been doing on gold. I've been calling for higher prices on gold all the way back here, back in May of this year, and even before that as well. So you're definitely going to want to pay attention here. So what happened, I'm going to move my face out of the way so you can see this. So what happened when we broke out here at the end is this breakout day right here had heavier volume. You can see this breakout was coupled with heavier volume. You can see it was kind of a volume lull right here before we broke out, but then you can see this day right here as we broke out was the biggest volume day in several months. Okay, it doesn't have to be the biggest volume day ever, but you want it to be a pretty decent volume day. So right here you can see we are seeing a volume lull, a lull in volume, which is no surprise because we're trading so tight in this range, so tight. Okay, this is such a tight range. And this is beautiful, this is great because the tighter we are and the bigger this pattern is, the more energy it's going to have for the move to the upside. Same thing that happened here. You can see we traded sideways for basically 3.5, almost 4 months, and then we broke out of that, and it essentially didn't look back for like 4 months. I mean, we went from 120 to 147 almost. I mean, that was a huge move in gold, and it essentially went straight up. Yeah, we had a little bit of sideways trading here, but straight up here, a little sideways, and then straight up right here before we started to rest. And that was a move that we called for, and we're actually riding ourselves as an alert that I sent out for some longer dated gold calls. Now, I think gold is really on the verge of breaking out. I think it could happen this coming up week or the week after that. We will see. But it's definitely looking perky. Okay, it hasn't happened yet. Okay, so I have no position on gold at the moment. I'm waiting to see if it really wants to break out. I think there's a very, very strong chance that it will, just given the fact of the pattern that we're seeing. It's very similar to this pattern. And I want to show you the difference between these two patterns that we're seeing right here, this pattern and this pattern over here. And then I want to show you the difference between this pattern. For example, and this pattern led to the downside move in gold. The difference is that this pattern is just sideways trading. We made this up move, and then we just traded sideways. There was no real coiling to the upside, just sideways trading. The major difference is that this has a little flag look to it. It's a counter trend. Okay, see how this one is angling down? That's the main difference. This one as well, angling down, counter trend, and that's exactly it's a continuation pattern. Okay, this could have led to the upside, but it's more likely that this will lead to the upside. Okay, when you have a big strong move, you just need to rest, and by resting, resting doesn't necessarily mean just trading sideways. Resting sometimes means going counter to the major trend. Okay, it doesn't mean that it's bearish, it just means that it's resting. So those are the kind of two main things that I want to discuss. I want to discuss also the longer term chart here for gold. And this is the weekly chart now, where every candlestick represents 1 week of trading. And I want to show you this major resistance that we broke over. Okay, the last time we were above this was in 2013. Okay, ever since then we've been below it, getting rejected, another rejection, rejected, rejected, rejected. Finally here we break over it. And if you put this into perspective, if you look at it from a longer term view, this weekly chart, you can see that this move that we've made right here, might seem overdone on the daily chart. But if you look on the weekly chart, you can see that we have a lot of room to run, and we basically just barely broke over this resistance. So now we're just kind of resting. And to me, and this is what I've been saying for a long time on gold, is that longer term, I think we're going to head higher. My longer term target is up here, right at that level, right around 152 approximately, and that's because it was previous support there, right here. That is a major about up there. So I think that once we get up there, we might be due for a pause, but that is like about $13 higher than where we're at. So we have plenty of upside room until we get to that point. So that's the longer term view here on gold. We are in an uptrend here in the short term and in the long term, and it's really important to be looking at multiple time frames, the weekly chart, the daily chart, so you can get a really good picture, an idea of where the trend is most likely to head. So I hope this information and chart analysis on gold has helped you out. What we're looking at right now is a portion of the portfolio tracker that tracks all of the closed out trades that we alert to subscribers here at thetradinganalyst.com. All of the alerts that I send out are swing trade alerts. Most of them are for options. We do stock trades as well. About 80% of the trades are for options. About 20% of the trades are for stocks. And we've been using this portfolio tracker for about 18 months now. In that period of time, the total profits tracking every single trade that we alert to subscribers is $318,564. That's accounting for the wins, the losses, the break-even trades. Everything gets factored into this profitability. All of the entries and exits are going to be texted to you in real time. The vast majority of these trades are also featured on a portion of this portfolio tracker that we call the watch list. And that way you'll be prepared ahead of time for what trades are going to come, as well as private member videos where I discuss the trades before they happen, sometimes after they happen. So it's really a good learning process. So as you can see, what leads to this profitability, the average win is about 50%, average loss 33%. The average win from a dollar basis is more than double the size of the average loss. And the way that we're able to achieve these type of results is that we're not just using the same amount of capital for every trade. We recommend position sizing as well. So for example, if we're very confident on a trade, sometimes we'll do double or triple our normal position sizing. And that is how you make those wins so much greater than your losses. Conversely, on a lower confidence trade or a trade that's just a little bit riskier, for example, every now and then we do some earnings options trades. And because of the heightened risk for those, we do sometimes even half or even a third of a position size. And that's just to lower the amount of risk that we're willing to put on that trade. So the wins and the losses, when you combine that together, it makes for very profitable trading. And when you sign up and you join, you're going to get access to all of this. The member videos, the watch list, and most importantly, these real-time trading alerts. I'm going to text you both the entries and the exits. You're going to know when to enter and when to exit, and anyone can do this. The average hold time of these trades is 10 days, as you can see right here. So if you have a full-time job, most people do, or if you're a student, or if you're a stay-at-home mom, stay-at-home dad, or if you just have a regular busy life like most everyone else, including myself, you're going to be able to participate in these alerts, and I'll text you. As long as you have your cell phone on you, you're going to be able to participate in these alerts. So sign up today, and I'll start sending you these alerts right away. I hope to see you in there, and I look forward to helping you grow your account on a consistent basis.